Hello, this is Dave, and welcome to Equities Story. I'm here with the wonderful Wolf, and just general share advice and not personal advice. Wolfie, it's all happening, and we are talking about it, but I think it's interesting. Those big what's the word? Revelations in the newspaper. Yeah, in the newspaper that Morrison was interested in basically becoming seeking the powers of being health minister, environment.
So pretty much all the most important portfolios. So he just wouldn't want to run the show fully, right?
So he just wanted, what you're saying, he just wanted to control everything. He was like power mad.
Yeah, well, some people call it sinister, some people call it strange, some people call it weird. I'm calling it autocratic, really. This is what it is. It's being very much in control of everything, and if it's not his way, it's the highway.
Really interesting. I wonder if he washes the dishes at home. Maybe if he likes to doing everything, you think he'd be making.
It's funny that after he obviously got booted out of the office, I think there was a incident where he went to one of his churches and he started talking about how do not trust the politicians or the politics, and don't trust the UN in his church. I mean, what a strange thing to say from a politician who was in charge of everything. It's just weird.
But I think it's typical. All these politicians, they're all power mad. You saw it with lockdown. They just like to control this. They like to. It's like the world's gone mad. Anyway, I'll have my.
There's a lack of talent in the politics ranks at the moment. It's probably been like that for the last probably 20 years.
Yeah, we need some new politicians.
Yeah, exactly. We need some new blood, don't we?
Yeah,
maybe
some new.
Take up with the Independence Day will give us a little bit more oomph.
In fact, Wolf, I reckon I'll be really good.
You?
Yeah, Prime Minister.
No, you'll just be bloody coming up with these conspiracy theories every day. No, we don't want that.
No, I'd be good. I'll tell you what, I'd have a bloody good plane like Air Force One. I'd definitely have one of those. Doesn't that look good, that Air Force One plane?
Oh yes, yeah. Safe as houses, that one.
I'd be upgrading our aeroplane. I think the Aussie one doesn't look right, does it? It looks like
can you upgrade the Equity Story gold jet stream or something? Gulfstream?
No, that'd be part of it too. Everyone would have to be a member of Equity Story, otherwise they get taxed a lot more money. I'd look after the company.
I love it. Oh, okay.
All right.
Vote number one, the Hound.
All right, Wolf.
Yes. Some interesting stories this morning, isn't it?
Yeah, so interesting. Firstly, James Hardy. So it's not trending, right? It's it's had a strong sell-off. It's tried to do something. It's starting to look a little bit weak. I think this is rolling over back down, maybe sideways. What did you make of the announcement?
I didn't see the result actually, Dave. Can you put up that thing? Let's have a quick look through it.
Yeah, most probably. I think on the surface of it, I had a brief read. It looked okay. I suppose this may be what you're seeing is on all these announcements, aren't you? It's
selling to the news, I think.
Yeah,
unless it's something incredible, right? Then you probably see a little bit of a further bounce. But we've seen you saw that chart that you just put up, right? And there's so many similar charts that it hit the lows, has a bit of a rally, like we talked about. There's going to be a market rally for maybe July, August, which we're having right now. So the stocks obviously bounce with it. But now, obviously, the reality comes home to roost. Looking at some of the results, are they good enough? People are going through and going, some of them are good, some of them are okay. So we're going to take some profits with the view that maybe the markets are going to go down further.
Yeah, so, and I think you saw a number of companies that have earnings in America, and there's issues there, and things are definitely cooling off. And this company is going to be affected with that, being in the property market, obviously.
Yeah, well, building industry, right? So yeah, I mean, look, it's interesting. There you go. You got based on continued strong executive goal. I think what the overlying theme is, there is that cooling down of economies, and it's done by the governments because they obviously like rising interest rates. We need to rein in inflation. So of course these companies will be affected somewhat. So I'm not surprised the James Hardys of the world, some of the others are just struggling a little bit, to start going up again. So it probably goes sideways for a little while until things settle down.
I mean, in all fairness, it's most probably in these conditions, it's actually holding up quite well. Isn't
it's not bad, is it? I mean, it's not bad.
Yeah, you're saying it's not the environment for the company, right?
No, and it is going okay.
Let's talk about CGF because they're down 9%.
Mhm.
Talk about killing the trend. If it looks like this by the end of the week, it's obviously a sell.
Mhm.
Ugly wolf.
Yeah, a mixed result. The negatives outweighed the positives, no doubt. I mean, the life insurance stuff was good, but the funds under management really was the big outflows out of there, right? Which is understandable because a lot of these funds out there probably losing clients hand over fist on the back of, performances, and the markets are being very, very flaky. So not surprising. They should. I think they come up with a decent up outlook at least. So I don't think it's a dead in the water, but the market's a little bit worried about where to from here for CGF. So it might just be going sideways for a little while.
Wolf, TPW just has had an amazing move up 19%. I mean, the charts are saying, I'm not interested in this at all, to be honest with you. You scared me what you said looking at this. I'll bring the results across. So plenty of revenue, but obviously the EBITDA is tiny. So the margins they're making on their products are minute, aren't they?
Well, they're not making any money.
I know the margins. Yeah,
but there's actually not profitability there. That's the problem. On 500,000 revenue, almost, right? 500 million, sorry, in revenues. I think what the market is probably cheering here, right? Why it's up 20% is probably not as bad as feared. And there is some good stuff in there. You've got active customers grew 21%. That's a good thing. Revenue per active customer grew 6%. It sounds good on paper, but I'd say that's probably a lot of just price increases, right? Not because people are spending more, it's probably price increases as a result of inflation. The other thing is here, right here, they're trading up. They've said the guidance, they moved the guidance from 2.222, from 2 to 4% to 3 to 5%. Market's cheering that. I mean, it's only an increase like 1%, but it's good enough for the market because it's still going to be okay, it's not.
I think when you look at that and you've got these sort of companies that they're selling furniture and bedding, what happens is it's very easy to say, oh, we're going to increase our margins. At the end of the day, someone's got to buy them. If they don't buy them, then you see the sale at the end of the week anyway. And those margins, I mean, it's great, the idea of saying you're going to increase your margins, but you still got to sell it
and Dave, and you've made an absolutely valid point. And we'll look at that third paragraph, right? It says on there, timing of lockdowns during 2022, the comparisons growth. We're down 21 in July, year on year. In August, trading down 17%. This is scary stuff, Dave. If I saw that would be completely just getting me out of this story.
Yeah, I mean, you wouldn't be. I think it's dangerous when you see these stories up 19%, and mums and dads would read that and they get excited and I'm going to jump on board. This could be a real trap, actually, Wolf, and this could go pretty ugly next week. This story.
Yeah, so if I was in there, I'd probably be selling into the strength.
Yeah, no, definitely. To make business.
I just don't believe in a model. The margins are going to be always very, very low. It's not one of those software companies that you're going to get 60% margins. You can see the margins are bloody tiny.
Yeah, and also, I mean, the cost of everything's going up. I think all those furniture is going to be costing them a lot more coming in from China.
JB Hi-Fi is doing 1,000 times better. Give me JB Hi-Fi any day. Even 5% growth. Thank you.
Well, let's have a look at 360 because I'll look at the share price action and respect. It's come back. It's back over trend. I'd like to see it stay like this by the end of the week. It's up 4% on the announcement. They say they're going to be EBITDA cash flow positive within a year and a half.
Yep.
What's your take on the story?
Look, I still like the story. I mean, still the growth is still there, right? If you look at the numbers, they are improving quarter on quarter. So I think there was like a 10% improvement from quarter to quarter. That's very, very good growth, quarter on quarter growth. So you got to give them more credit. And the fact is that they're still sticking to that. We're going to be, cash flow positive, EBITDA positive by end of 2023 financial year. We got to take them to the word, and the markets, I suppose, doing that right now by saying, okay, we believe you so far. Let's see if you can prove it over the next 4 quarters that you are going to narrow those losses down and become cash flow positive.
All right, it's an interesting, and if they do that, what sort of value could this company be? And I mean, it's sort of, I suppose it's on the old metrics. These are hard to value nowadays,
Yeah,
aren't
it
they?
is.
The
It
world.
is very, very difficult to value. I mean, you see some stocks are trading on 1 times revenue, Dave, and you see some stocks trading on 10 times revenue. Where do you put something like a 360?
So they're on a bit. They're right now a billion dollar market cap.
Yep.
Right. And obviously unprofitable.
Yeah, with about what 150 million in revenues. Is that right? Let me just double check that. Hang on. Let me see. I need to catch up with this. Let's go through and have a quick look. Hang on. And we can sort of just the
annualized monthly revenue to June is 174.
Okay, so that will be American dollars. Okay, so let's put them down on say 250 million bucks revenues. That puts them on about 4 times revenue, which is a quite attractive number. Yeah, it is. Yeah. For a good growth company, that's attractive.
Yeah, except yourself, you're not investing in stories like this at the moment, are you?
Oh, no, I'm not. I'm trying to find.
Yeah, tech's not the place at the moment, right?
It is. If they maybe over the next 2 quarters prove themselves that they are coming to that zero, the equilibrium of cash flows and becoming cash flow positive, then I might be interested in it. But I think there's better stories for me out there. I prefer the MP1s of the world. I prefer, the XROs of the world, the Seeks, the car sales. That's the profitable stuff, right? So this is maybe a little bit behind everything else for me.
All right. SWM, Wolf. Mm-hmm. We picked this one out really, really well. So in live the other day, we had a lot of people saying, Dave, sell. And we said, if you're trading it, sell. You're up near resistance. If it gets over resistance, then you can buy it. Long term, it's still a keeper because trading on a P of 4.
Yep.
Things that maybe, I think what the market don't like is advertising revenue slightly down, correct?
Yep. All right. So let's put up that announcement, please, Dave, so we can all see where we're standing with SWM, because it's one of our trading stocks, really, and maybe one of those contrarian plays in a way. So if you can just put up that announcement.
It's coming.
Okay. And we'll go through it quickly. So you can see on here, right? So we've got really, I think they're talking about this is the best result for about 11 years for them, right? So you've got to applaud that. Also, they're talking about on-market share buyback, 10%. Fantastic, Dave. They've got so many shares on issue. This is a great news, and it's going to be highly accretive to EPS. I'm loving this, the fact that they're going to be buying some of the shares back. So that should be at least some support to the share price. So everything on there, beautiful. It's the outlook. So let's go down. Let's go down to the outlook, and that's where it gets a little bit more clouded, and possibly why there's a bit of profit taking in it. So keep going down, and you'll see where I mean. So that looks good. So just go back slightly, up, slightly up. I'm going to go here. Yep. So leave it there. So we've got the EBITDA, EBIT, underlying NPAT, and EPS. You can see everything's up there. So 12.7 cents for EPS. I think it's trading, 49 cents? Yeah, that puts it about 4 times earnings or P ratio. So go down to that outlook. So that looks all good. So go outlook here, priorities. So we've got 7's 1 quarter is skewed with the impact of the Olympics. So we knew that that's going to be the very strong period for them, right? So all they're talking here now is estimate first quarter total advertising market is down approximately 2%, right? Visibility improving into second quarter with longer dated forward bookings. Outlook for 7's second quarter currently positive year on year. So that's good and bad in there. So down 2% for advertising market, yet second quarter currently positive year on year. So hopefully it'll be better than previous year. There's a little bit of maybe, question mark. Can they sustain this really strong growth? So the market's, understandably maybe take some profits out of it. But for me, it's short-termism. I think overall,
well, of course, it's only natural. The Olympics would have been a big boost for them. It's a little bit. I mean, and they are getting the Channel 7 is getting some of the best gigs at the moment, aren't they?
Yeah, Dave, the market's very, very short-term thinking, which is not great, but for the longer term investors like us, I think this is still a hold for sure.
This is interesting, isn't it? Targeting 39% total TV revenue share by FY23.
Mm-hmm.
But that's Channel 7 was always one of the big 4, wasn't it?
that it is number one. If you have a look at further up, it says they are number one pretty much in all demographics. They've got the number one shows.
And I remember when I first arrived here in Australia, it was always Channel 9 that had all the good stuff.
Yeah, that's right. Now it's changed. Now it's Channel 7.
That's good. Which is good. It's excellent. All right, Wolf. It's a keeper for the long term, and you know, if you're trading it, well done, you made a profit. But if you're long term, I suppose the argument is buy on weakness.
Yeah, I mean the thing is, how far can it go down? So just be patient. Wait till the end of the week and see what happens. See what at least what the brokers say out there. You know, when the ones that are going to go comb through the whole of all the divisions and see if they can pick up anything maybe untoward.
BHP, Wolf. What a great dividend play.
Dave, if you're going to be shut investors up, right? Just throw money at them. That's doesn't matter how bad or good the results are. If you throw enough money at them, it'll make everything all look good. That's what they've done.
So what dividend are they on now?
Oh my God, I think they're paying out. I think I've never seen that before. I think they're paying out almost 77% out of the total profits, paying out in dividends. Unprecedented. Normally they pay out, 50 or below. So they're throwing a lot of money at people. And they had a profit of it wasn't. Hang on. Let's go through the numbers, Dave. Let's put it up. Come on. Let's have a quick look so you'll see what I'm talking about here. It's just crazy numbers. They're billions and billions of dollars in profit.
Hold on 1 second.
The thing, Dave. The thing is with BHP, right? It doesn't matter how great it looks right now. If the question is, what is it going to look like in 12 months' time? And the question you can't answer because you don't know where the commodities are going to be. That's the issue.
Right, let me just bring this up.
That's why it's always a very difficult story to hold long term. Okay, so they've obviously had a pretty good time of it. Had a strong look at the profit from operations, 34 billion, right? Net operation cash flow, 29 billion. I mean, my goodness me. And it's those sort of profits are like crazy numbers. So value and returns, record 36 billion of total announced return to shareholders. I mean, Dave, that's like smack in your face. 36 billion.
A little it's an incredible little cash cow, isn't it?
Yeah.
All right. So you just if you're in this, Wolf, you're just happy holding it for that dividend.
You are. If things change. So for example, if you're probably coming out maybe to a period of lower dividends, you maybe move on to something else. But I still think they're going to paying out some decent dividends. And right now, it's gorged. You're gorging on dividends, right? Don't expect this to continue. Enjoy it while it lasts, and expect maybe in 12 months' time your dividends will probably be much less, but still decent. That's why you're still holding it.
All right, Wolf. Another holder for you long term is Goodman. Yep. It's sort of flat on the announcement. It's struggling to get through trend. It's not trending, but I mean, looking at roughly I think they're looking at what revenue growth next year for about 11%, which a little bit less. But yeah, I spoke about this to you earlier, though. You always, I remember when you first came on Equity Story, we're talking about CSL. You said, Dave, give me a stock that's growing by 10% a year, a big blue chip, but you said, and it's a keeper for me. Mm-hmm. Is Goodman in that sort of category for you?
Yeah, it is, because I'll tell you why, right? If we go back to August 21, right, and see the results there. So I'm going to go back to August 21, and I'm going to read it out to you. So we had an operating profits of $1.22 billion, up 15% on FY20, right, in FY21.
Yeah.
Now, they said at the time, last year, so 12 months ago, and I'll give you the little spiel here, what they're looking for outlook. After a robust year in 2020, we expect the current level of development to be sustainable the coming year. The group is well positioned to maintain our staff. So they're talking about, right? As a result, the group expects to deliver FY22 operating EPS of 72.2%, so up 10%. So how much did they deliver, Dave? Much better, right? So you've got a company that under promises, over delivers over the period of a year. So I think they're being conservative, 11% growth, right? come up with 10% last year. You're coming up 11% this year. I think this is an opportunity again. If you don't have any GMGs, you pick them up, right? Because they obviously outperformed FY 2021.
And currently trading on a P of, they were 11, 12. I suppose they'd be about 8, 9 now.
Well, you know, if it's 25% growth, and what was the EPS? Let's have a look at it again. Hang on, let me have a look at your story here.
There you go.
EPS was up 24%. Yeah, so you're probably looking
About that.
I have to work it out, but you're probably looking at decent numbers, right? You're probably looking at maybe, hang on, let's just work it out. I've got my calculator here. So while you're asking, so let's go, let's do it. You're asking the hard questions, Dave. Let's work it out.
Well,
So
I'm interested. I tell you what, I'm interested. What the historical of the P is. It's just interesting to see. I mean,
yeah, I think the PE used to be at least over 20 for something like a Goodman. But okay, let's look at the numbers at the moment. So GMG is trading. What's the $20? Is that right?
you want the exact price now?
Yeah. Give
Hold
me
your
the
horses. 20.67.
Okay, 20.67 divided by 0.813. This is their way of working out what the EPS is. They've got a little number 2 next to it, so they've just slightly adjusted. It's actually trading on 25 times, right? This is on financial operating metrics, EPS. So they would probably have an EPS of financial metrics and maybe some other metric which Reuters picks up, and it's trading on about 10 times. So I am going to work with what the EPS is on, what financial metrics the GMG works. So 25 times, and I think if we look back over the, like I said, previous history, they are still roughly around where they are over the last five years, you know, in the 20s. So I'm happy to, like I said, pick them up and go with it. 10% growth, 11% growth. If they can deliver 15% growth per year on year, I'm happy.
Right. And what dividend are they with Goodman? It's not as strong as most companies, is it?
Oh no, you're not picking up for the dividend.
Yeah.
What you're doing is, it's just a bonus for you, right? The dividend here is just a bonus. You just want growth out of them. That's all you want.
All right. Interesting, Wolf. I think maybe in this environment, because we know it's going to be tough. The market is, you know, it's maybe possibly, I could argue, sideways, isn't it? Might be a bit sideways for a year. Seek.
Yep.
Now this is a story that you're sort of, and understandably quite bullish on, Wolf.
Mm-hmm.
You know, there's a lot of people changing jobs. You know, a lot of people couldn't be doctors anymore, couldn't be nurses because they refused to take the vaccine. They had to find another job. So, you know, the vaccine, you know, shuffled a lot of people around. That was most probably pretty good for Seek.
Dave, okay, I've got a question for you and for everyone else out there. So, you know, during the pandemic, a lot of people, you know, maybe found a different job or moved somewhere else, right? So we know, for example, the travel industry is struggling for workers, aged care struggling. Where did all these people go? Where's all the workers that we've had that were working in those industries? What did they retrain themselves as? Brain surgeons? Dave, I want to know what happened to those workers. Where are they now? Can someone please explain where is everyone sort of retraining themselves to? Which industry? I'm intrigued.
Maybe they're all becoming traders on the stock market,
or maybe there's just you know, anti-vax on the web.
Yeah, anti-vax.
I don't know. I'm intrigued. I don't know where they've gone to.
Well, I think, Wolf, you can see there's massive still holdups at the airports, isn't there? They're short of staff. They're short of pilots.
Yeah. So you know, where do they go? Where's the pilots? Where's the, you know, the industry workers that were in, say, working at the airports gone? What happened to them? Which industry have they retrained us? Because even they're like the hospitality industry lost a lot of people, and they're struggling to get people back. So where do they go? I'm intrigued. I've got no idea did they migrate to other countries? Bizarre.
Well, England allows everyone in now, so maybe they went to swim across the channel. All right, Wolf. Anyway, what did you think of Seek, the announcement?
Very good, very good. You know, this gives me more confidence to hold this for longer, even though it's still, you know, expensive in a way. Look at the numbers, pretty good, right? On first look through, you've got, you know, you have to look at the reported ANPAT, and that's 81%. So continuing operations, of course, we've got to look at that as the main look through. and that's very, very good numbers there. I think they talked about outlook, and that's the key for us now. And again, 10% growth across the board, across from revenue to the reported NPAT through the EBITDA. So for me, a keeper again.
Yeah, brilliant. Brilliant. All right, Wolf. Have a look on the chart. A keeper for you long term, obviously short term for me, it's not trending, so I'm not that interested.
Fair enough.
As with MNY, you know, again, it's had a move up. I don't see the risk reward. I wouldn't be buying this, but I mean, they always deliver, don't they? Pretty good announcements, MNY.
Yeah, the little companies that are in a strong industry right now, which is their car industry, and they are, loans for the car industry. It's a very tight market, so they're doing quite well. You've got to give them some kudos for that. But is it a story that I'd be interested in? No. There's better stories out there. I want quality. I want global, maybe, in a way where I can see millions and billions of market cap glory. This is not going to happen here.
Okay. I'm glad the management of M&Y didn't hear you say that. They most probably got like worldwide.
I don't think they've got that outlook of we're going to dominate the globe. It's not that kind of business. That's why I can say I'm not going to upset them.
Okay, but can you argue not a bad little dividend play? Safe solid little dividend play.
100%. It's a risky 5% or 6% dividend play, with a low PE, but it's okay. Some people can take the risk on, and as soon as you see that industry turning, you get out. But
all right, so I'll ask you a question. What is the dividend of M&Y?
Well, let's have a look. Let's have a look at the numbers. Give me that result again. We'll work at it right now. All right.
Now you've lost me. Okay. Right. Okay.
Well, you asked me the hard questions. I'm going to ask you the hard questions.
Okay. Not a hard question. I've just got to find all the stuff on the computer with
all right, so
I've got 4 screens. They've got here.
30% increase in full year dividends to 13 cents with a final. Okay, well, let's work it out. And what is the price at the moment?
I can do that. $2.47.
5.3.
It's a dividend.
Yep.
Right. So, okay, my question to you then, because this is a hard question. Would you buy this stock for a 5.3% dividend?
No.
All right.
Look, this is just it's a very personal question.
No, it's not.
Personally, no, I wouldn't. I've got other...
Because you've got better stories to buy that give you a 5 point.
Possibly, yes, exactly.
You to buy MN3, this is what I'm getting at. You'd want 8% or 9%.
Yeah, something like that. I think so. I think you've got to give me much more incentive to buy M&Y. That's a very valid point, Dave. I agree.
Okay, right. That's right. SGF.
That's a good looking chart.
This is a good looking chart, right? It looks like it's a little bit more in this, Wolf. You want to talk about it? Did you?
Well, look at the chart. Look at the results. It's again not my cup of tea. The fleet business, right? But again, it's a market that should be fairly good for them in a way, and they're delivering. So again, if you look at the numbers, they are going quite well. You've got not a bad looking chart, but it's not for me. It's probably for some other people in there. Let me just tell you what the numbers are for them too, so we can get a bit more of a financial overview or valuation overview. So SGF is trading on 17, 18 times with a dividend yield of 7. Again, is it attractive? Probably to a few people, yeah, it would be. For me, okay. I think I probably prefer this to M&Y.
Yeah, so it's got here. What P is it on your
17?
Yeah, I've got 18. I've got a 4.9% dividend.
Okay, mine is fully.
Yeah, I know you have the posh Reuters. You get this expensive Reuters. I have to look at this.
Well, you've got to give.
I get market index.
You've got to give the Wolf the best equipment possible to give you the best possible answers.
I know. Wolf, SGM,
okay.
Terrible. I mean, it's holding up. The chart doesn't look too good, but suffering badly, aren't they?
Yes, so we're going to start getting to the bad stuff right now. We've got to go through them. SGM, the result was actually very good. The fact is that it's almost dropping off a cliff, right? Because the outlook is dire. If you read through the actual announcement, unless things pick up, they're talking about, demand dropping off, the prices dropping off for scrap metal, all those sort of things that made this jump from in 2022 to $22. That's all evaporating pretty much. So we're back to 15 and probably a struggle street from here.
Yeah, it doesn't look good. And the chart just looks very uninspiring, doesn't it?
Mhm.
Wolf, sizzle.
All right, I want you to put this up because we want need to see this for everyone to grab their head around this, right? So put this announcement up and you'll see why this whole sector is now really big question mark on it, and why maybe, you've got to be probably out of all of these things, right? So go down to, well, we've got
nice photos though. You've got to give them that, haven't you?
Well, they spent a lot of money on that.
Yeah, look.
Yeah.
Very nice. Right. Say woo.
Oh yeah, you've got the report out instead of the actual announcement, but that's okay.
Oh, sorry.
That's okay. That's okay. Let's just go to where it's got the revenue numbers and then the profit. That's the only thing we need. So you
where
can
are they?
see what's going on. Oh, here we go. Yeah, underlying mentioned sales. Go up, go up, go up.
Yeah. Okay.
Hang
on, let me get the other one, Wolf.
That's okay.
It's just complicated.
Yeah, it is. Because it's spread across about 50 pages. That's the problem with this one. Let's get everything concise on the one page. But yeah, anyway,
I just thought
the gist of it is growth really anemic, right? For a company that's touting itself as a super strong growth company, right? Look at that total income, 6% up. There you go. And then net loss blew up from 30 million to 43 million. No thanks. Pass. Next.
So, understandably, Wolf, it's absolutely got hammered. It's down 11%.
Yep.
I mean, it just shows. We talked about this the other day how this is all real hard money and bang. Zip is on the way. Look at Zip.
Yeah.
But I'll tell you what, that's going back down to the lows. We're sort of talking about, and to be honest with you, we got a little bit of criticism on this one because it was at $1 or $1.10. We said get out of it. It went to $1.60, but really that was just all FOMO rubbish. And look, down it goes.
Yeah, it was probably short covering, right? Probably the short has got out now and probably going to go have another go at this after the result from Zezel.
Now, Wolf.
Oh yes, let's go.
I'm going to talk about this. You never like brain chip.
Mm-hmm.
You never like Weebit, right? I might actually have a look at those charts.
And this is the reason why, Dave. So
hang on, let's have a look at brain chip, right? So brain chip's holding up all right? Weebit is holding up, right? And it doesn't look too bad, right? It's just holding up, right? But the reason being, you never like this story is that this is the problem with them. And you can see 4DS down 64%. So it's gone from a market cap of 134 million to I don't know, what's that, about 60 million overnight.
Yep. So the question is why, right? Bring up the announcement. Let's have a look at it. And this is why there's such a high risk with these companies, right? It only takes one announcement to pretty much wipe you out. Because they've got no revenues, because it's not commercialized, they're still in that. And I know maybe these guys are way behind, the Weebits and the brain chips of the world, because brain chips is in a sort of commercialization phase, so they've gone.
Well, they are. I think they're about sort of 2 or 3 years behind.
So. But but the thing is, it is still a very risky thing, because if one thing goes wrong, you could have a complete wipeout. Like I said, if you look at the actual announcement today, but it's about you've got a whole page of information, but it only takes one little line on saying, we've got issues. That's pretty much right at the end, right? Until the issue is resolved, endurance retention testing of the memory cells, so just the primary goal cannot be successfully completed. That's all you needed. Put it on top, right? That little line, and you go, okay, I think we've got issues. We have to go back to square one and start working on this again. See what the issue is. It's almost like they fix one thing and there's another problem. They fix that problem, there's another issue somewhere else. So. I'm not a rocket scientist, and I don't understand this, but I can see when there's a problem, there seems to be maybe a problem that it might continue over and over.
Well, yeah, definitely. I mean, it's highly technical stuff, these chips, but I'll tell you one thing at the moment, Wolf, I think a few guys there have got a chip on their shoulders. Well,
Oh, please leave the jokes for the
right.
fathers out there. Oh, hang on, you are the father. That's a dad joke. That's okay.
That's all right. That's the best. Come on, that's one of the best jokes I've ever made.
Exactly. That's pretty good. I'll give you that.
SMR looking good. That little hot stock. Buy signal. Sorry, buy signal. It was moving up absolutely beautifully.
Yep.
Wolf, just having a look at the general markets. We saw that the Dow held up and actually fought back towards the end of the session, which was really good to see. And our market is just teetering over trend, which I quite like. Now, I'm reading a lot of reports in America, which in some ways worry me a little bit, Wolf, because everyone's calling this a bear market rally, and I don't know. I like it when everyone's saying the opposite, to be honest with you, and not agreeing with me, but they are agreeing with me, which worries me a little bit because most people get caught on the wrong side of the fence. I'm still into the view it's a bear market rally, and this market's going to shake down.
I'm actually opposite for you. I'm actually happy that everyone's calling a bear market a rally, because usually the market does something completely opposite.
Precisely. Well, that's what I mean. Precisely. I like calling this. I was calling this a bear market rally down here when everyone was calling it dead, right? And now everyone's agreeing with me. I'm going, you're not meant to agree with me.
Yeah, exactly. So maybe that will surprise everyone. Would be good.
Well, it does worry you a little bit. I mean, you trend, you go with the trends, but you don't want to go off the cliff with the lemmings. So maybe we just got to wait till everyone starts saying, no, it's going to boom. This is going to be okay. Now we're going to boom back to the highs, and that'll be the signal that we're going to go down.
Yes, exactly. Please, everyone, negativity. That's what we want.
All right, Wolf. On saying that, thank you very much. Good report. We had a look for the. So really, just to recap, don't go near TPW. 360 too soon. SWM is a keeper. Goodman Group is a keeper. BHP is a keeper for that dividends. Seek, if you're long term, is a keeper. It's certainly not. I'm not interested in it. It's obviously not trending. MNY, you won't get into bed with them for 5%. That's fair enough. Okay.
I need about 8.
You're a class.
I'm not cheap, Dave.
And these buy now, pay later stories are getting worse and worse.
Absolutely.
Get out of Dodge.
And I reckon TPW, Dave. I probably, looking at it, I'd be selling to the rally.
Okay, if you had some. All right, well done. We'll have a good. You can go back to bed.
Don't forget tonight. We got to have everyone on tonight, because we got to talk stocks. Come on.
All right, I'm actually we're live at 7 o'clock. Oh, Wolf, can I just say we've got Cincinnati this weekend.
This weekend, is it?
Yeah.
Oh,
I think so.
I think it's next weekend, the following weekend, isn't it?
No, it's this weekend. I think so. Oh, we'll come back on live.
Oh, I think it's in 2 weeks.
Really?
Yeah.
My calendar. All right.
That's lucky. Because I got it.
We'll check later. Well, anyway, we'll tell you on live tonight, and we'll tell you.
Yeah, exactly. We don't even know when it's happening, when things are happening. Oh God.
They work us so hard, Wolf, don't they? But we'll come back to you tomorrow with live, because whether it's this Saturday or next Saturday, if you haven't done the CTM course,
do it.
It's changing people's lives.
Yeah.
For
the better or for the worse.
All right. Thanks, Wolfie. See you, mate.
See you tonight, guys.
Bye.
Bye.